You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again for a little bit of Friday volatility dose. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the TAG, optionsinsider.com, as well as from the network that's been coming at you all week long. Hope you had a good trading week. Hope you're having a good content week, enjoying all the content we threw at you this week. Had a fun bonus that we recorded, hasn't gone up yet. On Wednesday, I got together with our buddies, the Flow Master, Mr. Henry Schwartz from SIBO. We had JJ Kinahan from IG Group and Mr. Greg Magadini from Crypto Land. All flowing in to join us there on Wednesday in frigid Chicago for an awesome panel diving into all things options that are kicking off the year here in 2024, including a lot of zero-day fun. You folks really wanted us to talk about zero-day, so we did. If you want to check that out, only one place to go, theoptionsinsider.com/pro. Our editors are cutting it together right now. Someone, I won't say who, surreptitiously recorded it just for you folks. So you couldn't make it out to STA this year in Chicago, frigid Chicago, I get it. Then it's going to be there for you over there on the Pro. So if you're not part of the Pro yet, what are you waiting for? You also get Options Oddities coming up after this show. You get Pro Q&As. Rumor has it I might be joined by the Meatball one of these days in the coming weeks to talk about all things zero-day. So a lot of vol, a lot of all sorts. I mean, vol is almost omnipresent on those Pro Q&As. So if you like vol and you're listening to this show, so I think you do, then you got to be heading over to the Pro, theoptionsinsider.com/pro. Giveaways, live streams, heckling our guests, all sorts of fun to be had over there, as well as a good group of people. Pretty fun to hang out with. Theoptionsinsider.com/pro. As we go around the horn, let's see who we're hanging out with on the show today, including I am joined first off by the aforementioned greasiest of meatballs himself, recovering from the just Arctic temperatures they had down in Austin. I think they hit actually 32 degrees. Shudder, sir. How did you survive, Mr. Meatball? Welcome back.
It was a scary couple days, I got to tell you. The Texans, don't mess with Texas unless you're cold weather, and then mess with Texas all you want, because you will win.
Frozen Texas, a shadow of its former self. All right, Mr. Meatball joining us, and also joining us in the hot seat for the first time in the new year, our old pal, Mr. Jim Carroll. Now hanging out as the Senior Wealth Advisor and Portfolio Manager at Ballast Rock Private Wealth. Mr. Jim, welcome back to Volatility Views for the first time this year, sir.
2024, let's go.
Let's go indeed. Right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show we break down what the heck is lighting up our tape and from unusual activity, about trading and trending and analysis, all sorts of fun perspectives. And we're going to get to all that fun in a second. But as I mentioned, this is Jim's first time joining us here in the new year. So we like to take these moments early in the year to look back at the mad year that was 2023 from a vol perspective. And luckily for us, Jim came armed with his own report on exactly that topic, listeners, his 2023 volatility update. And Jim, as you'll recall, this time a year ago when we were talking about your 2022 vol update, the narrative everyone had in their minds was, okay, 2022 was the year that VIX was broken, the year that VIX didn't work. We had a huge sell-off in most of the broad indices, and VIX barely budged. Who needs this VIX thing? This VIX thing is garbage. VIX is broken. So that was the narrative coming out of 2022. Now that you've compiled all the data, sir, what is the narrative looking back on 2023?
The narrative is no fear. It was the no fear year.
The year of no fear. So you're a Daredevil fan? The man with no fear? That's you, Jim? I can get behind. That's good branding for the year. 2023, the year of no fear. I can get behind that, sir. I like that.
Look, if you take out a week when we thought we were going to lose all of the regional banks, there was nothing going on at all.
Yeah, it was a surprisingly quiet week in some aspects. In other regards, it wasn't. I want to get into some of that right now. Obviously, this is a pretty interesting report. Can people access this for themselves, or is this exclusively for internal consumption, Jim?
If people reach out to me, I will. The version sent to you is not quite final, but if people can track me down, I will be happy to share my 2023 volatility review.
You won't retweet it to the masses or anything like that. And yeah, we'll let the folks chase them down over there on Twitter at VIXologist.
Exactly.
It's worth doing. It's some good data here, some good nuggets to be found here, listeners. Let's get into some of that. I like that moniker, 2023, the year of no fear out there, because you're right. It was kind of an interesting year. We were just talking about this with Russell a week or two ago. So he actually surprised Andrew and myself with some data, because I had pointed out that last year was an interesting year at exactly 19-point range for VIX. The high was, I believe, 30.81, which we only briefly kissed, as you mentioned, back in that mad maelstrom of mid-March when everyone thought all the banks were going away. And then the low was 11.81, so exactly 19-point range. That came right about when you'd expect, right around mid-December. So that seemed like an actually decently wide range to me. So he threw a little bit of a trivia question at myself and the Rock Lobster. How many years in VIX history was the range greater than 19? Was it more or less than 50? And I immediately said, low, less than 50. Andrew, we both said right around, we thought about 25%. And it turned out the answer was actually 55% of years have had a wider range than 19 points, which A, sounded crazy to me, but B, also goes back to your year of no fear, sir. It wasn't a year of much fear.
Exactly. Yeah, there's a chart that shows the high, low, and average for VIX. The one I'm using just goes back to 2005, but even just eyeballing that, you can see a bunch of years that had a wider range. Some of which would be no surprise, 2008, 2009. But then you got 2010 and 11. You had the hangover from the global financial crisis. 2015, we know what happened August there. 2018, we had Volmageddon and then the Fed scare at the end of the year. 2020, no-brainer. But even 2021 and 2022 had wider ranges than we had last year.
Yeah, that was surprising to me, and I think definitely surprising to a lot of our listeners. 19 points sounds like a pretty decent range, but in hindsight, there were some surprising years out there. And looking at your data points from your report here, Jim, last year, kind of a surprising one in a lot of ways, too. Spent almost the entirety of the year below 20. As I mentioned, the high was 30.81. That came in mid-March, but we only kissed that ever so briefly. As you point out, Jim, only 2 spikes going above 20, and those pretty much corresponded with the 2 lows we saw for the S&P, which was, of course, right around mid-March and right around Halloween, sir. Is that your takeaway as well?
Yes, absolutely. Really only 2 little surges in volatility. And even with those, as one of my charts points out, if you just look at the front 2 months of the VIX term structure, the futures term structure, and say, hey, if the front month gets above the second month, that's backwardation. We had exactly 2 days where that was in place in 2023.
Yeah, 2 days of backwardation. That was a fascinating little nugget for me as well. 'Cause, right, you see that, and that alone just shows you're right. No fear to be had. So it was definitely the daredevil year in the market out there last year. Year of no fear, listeners. Also, the fewest days above 20 since 2019. So I guess, Jim, if there's another takeaway, maybe another narrative we can draw from all your data here, is that maybe, I use that maybe very strongly, but maybe are we perhaps back to a pre-COVID type vol regime? Would you say that, sir?
Well, we'll find out, won't we? But one of the ways that I look at that, measuring that over, the full life of the volatility index, is to look at it using a 1-year moving average. And if that 1-year moving average is above 20, then you can look on either side of that happening, and there tends to be some disruptive behavior in the marketplace. When that 1-year moving average gets back below 20 and hangs out there for a while, things tend to be relatively calm. COVID took us above 20 on that 1-year moving average, but we have gone back below that 20 level. So, if you just take that bright line test as the descriptor of high vol and low vol regimes, then we're back in a low vol regime. Whether we stay there, given all the fun stuff that's going to come ahead of us in 2024, who knows? But that's where we sit today.
Yeah, a lot of this data pointing to pre-COVID numbers. Like you mentioned, VIX had the fewest days above 20 since 2019. The pre-COVID era, the moving average dropped back below 20. That's kind of pre-COVID levels we're looking at as well. Also last year, kind of getting back to that narrative of, VIX is broken. We didn't quite hear it as much last year, but the response of VIX, as you point out here in your charts, Jim, to changes in the S&P was subdued compared to its history. And you also graph it out here. Average VIX change per 1% SPX change, which is that's a good data point. We don't see that plotted out as often as I think it should be. So that's kind of interesting in and of itself. If you see this, listeners, you'll see that also it is pretty muted, well below the 1% level you would expect. It's like around 0.8 if my interpretation of this graph here is correct. By the way, I see a lot of our listeners here in the chat asking for a copy of this report. Don't ask me. You got to ask the man himself. So hit up Mr. @VIXologist on Twitter, listeners, and maybe he will be kind enough to grace you with a copy of this. Also, as you mentioned, Jim, another data point that just leaps out to me, it's worth saying again, 2 days. 2 days only in backwardation last. If VIX can go backwards, if you cough too hard. So, I mean, only 2 days of backwardation. How does that compare historically in terms of other years, Jim?
Well, it's at the very low end, as one might imagine. Let's see. I think there was, 2021 sort of matched that. But even 2017, hard to believe, had a couple days more than that.
That's scary.
It's a rock bottom level.
That's scary because 2017 is like the black hole for vol, for options. That's a dark year. We don't talk about 2017 on this network anymore. In fact, if you look back in our archives, all of our shows in 2017 are erased. We pretend that year did not exist. So yes, the fact that last year had fewer days in backwardation than 2017, that's a little bit scary. I'm not going to lie, Jim. You said it's a year with no fear. You just gave me a little bit of fear. So congratulations. Mark, I'm crunching a lot of this data here with Jim. Any thoughts on these numbers we're throwing out here so far, sir?
Pretty amazing. Not really that surprising. I would have thought we'd have gone backward a little more during that mid-cap bank mess. But this was definitely a risk-on year, a year of volatility normalization. And, a return to what a lot of us were kind of used to in 14 or 13 or 17, some of those years. I'm interested to see what this year brings, but definitely has the feel that we could see that happen again for all we know. Pretty fascinating stuff.
Yeah, definitely. Another fascinating data point I want to get to, Jim. Then I'll know we'll get into some of our analysis for this week. Is this VIX volley spread? That's kind of another data point we don't see tossed out about too much out there, but you kind of come back to it a few times in your analysis here. Why don't you give our audience a quick overview of what you're talking about? What is that VIX versus volley spread, and then why do you find it so significant?
Sure. So kudos to our mutual friend Scott Nations and his gang at Nation Shares for coming up with volley as a measure.
Terrible human being, that Scott Nations. Can't stand him.
Anyway, the volley is the at the money measure of implied volatility. It's the, so it's again, if people think of VIX as the 30-day implied volatility, but it's including the tails. And Scott's innovation there was to say, hey, what we really care about is what's going on at the money. And so VIX, the spread between VIX and volley really is representative of what's going on in those tails. And Scott would say that it's one measure of skew. And so I like to look at it because, if they're fairly tight together, then it's saying that most of the action is near the money. And when VIX gets wide of volley, there tends to be more going on in the market, more activity, more jumping and shaking. And sometimes you can even pick up on that spread rising as an indication that there may be some shenanigans about to unfold. So it's something that, I keep an eye on. Once again, last year, the spread between VIX and volley was, at historic narrow levels. And that spread, which, historically has gotten as high as almost 16 in 2020, and has been above 10, 2018, 2021. So you've had some clear separation, some big skew days in there, but it never got above 4 in 2023, the year of no fear.
The year of no fear, indeed. Yes, Scott's been on here many times and on our pro Q&As talking up volley. That's one of his definite favorite metrics out there. I was sad to see some of the Voldex stuff going away at NASDAQ. Hopefully they'll find another home for those, because there is a use case. I think there is a demand out there for something that strips out the skew. You can also measure it, obviously, with an index like volley, but something that does straight up add the money. I think for a lot of people, that sort of alternative to a VIX is appealing. So hopefully we'll get some more insight into that coming up maybe in 2024 as well. A lot to unpack here. Definitely check out this report. Reach out to Jim at VIXologist. I'll let him mull over maybe at the end of the show if he has some other final takeaways he wants to share with us. We can get into all that fun as well, but a lot of fun going on in the market this week, listeners out there, especially if you're in the bull camp. Yesterday was one of these days we were well south of 47.5 and looked like we were going to start threatening the 4,700 level. And then, bam, just middle of the day, that turnaround kicked in. It was right during option block yesterday, as it turned out. We started talking about things turning towards the green, and we ended up closing pretty firmly green. And now coming into today, the end of the week here, firmly green again, back up over 4,800, about 48 and a quarter as we were kicking off the show. So last couple of sessions, the bulls firmly have the bit in their teeth, and they are running with this market. When we kicked off the show, VIX was at about a 13.5. I got a feeling as we wind into the crystal ball, it's probably going to be a wee bit lower. That still puts it up net on the week, almost a full point, about 0.8. Of course, we had a dalliance earlier this week with some of the red on the screen, and that drove VIX we got up to about a 15 handle, about a 15 and a third or so. So that was kind of nice, kind of refreshing. In fact, that was right in the middle of when we were doing that panel on Wednesday. I happened to glance down and see that we had a VIX at a 15 handle, and I kind of felt good about that. The VIX with a 12 handle, listeners, 13 handle, kind of gives me those PTSD moments from back in 2017. So VIX of a 15 handily got some breathing room, kind of losing some of that breathing room now. Still up nearly a point, but only at about a 13.5. VVIX right now also continuing to give up the ghost at about an 82. That puts it down, about 8 points from where it was this time last week. So a lot to unpack. Let's go out to the Southern Volatility Mecca now. Mr. Meatball, we missed you on the panel out there this week, but a crazy week on the vol front, sir. What's been catching your eye out there, sir?
Yeah, despite the fact we're at all-time highs right now, VIX is 1360-ish. No, that reading can't be right. Where is VIX? VIX is, 1360. So we're at an all-time high, and VIX is still holding a bit of a bid. We've got this price action of VIX being firm while the market rallies. This is where tops are formed. Talking to my friend Jim Carson, who's been a guest of the show, he had kind of pinned this next week as an area where liquidity is going to be a little, we could have some liquidity pockets in the market with Jan coming off, because Jan expiration is a huge expiration, right? We get ETFs and equities where, these leaps have been around for 3 years and they're going away. And you also get a lot, it's a big index expiration as well. So next week could be really interesting. I'd really like it if vol was down a little bit more on this move, and it's not. I'm also a little freaked out by the Russell 2000, which just finally is able to get positive today, but has been just a complete dog. This rally has been very, very narrow.
So fair to say you're not buying what you're seeing on the screen, that VIX is still keeping you a little bit, shall we say, cautious, sir?
Yeah, I mean, the term structure on VIX is really pretty tight given how much time we have left in February. And that just shows you that the market thinks there's another big move coming. Could be up, could be down, but I don't think the fireworks are over here.
Interesting. The fireworks are not over. Certainly has that air about it. I will definitely agree with you there. Mr. Jim, same question for you, sir. Kind of a wild week, certainly a whipsaw-y day out there in the markets yesterday. But as Mark pointed out, vol still remaining a little bit firm, a little bit frothy. Is that also giving you a little bit of the heebie-jeebies too, sir?
I'm looking right now at a chart that compares the performance of SVIX, the 1 times inverse VIX futures, and VIXY, the 1 times long, year to date. And there are no straight lines to be found. They just keep crossing over one another. One day you want to own one, and the next day you want to own the other one. And, the net result is much ado about nothing. So it's definitely been a whipsaw market. It's been a market that has been, very difficult to decide which side you want to be on, which suggests that you probably want to just pull up a chair and watch for a few days. I think the only people I know that are making money are people trading intraday.
Yeah, it's that old Chinese saying, right? Sit on the hill and watch the tigers fight. And there's something to be said for that right now out there in these markets, because you're right. There is still a lot of unknowns lurking out there. We'll get to some of that. You'll be surprised, some of the volume numbers we have from earlier this week, listeners. And we have these crazy whipsaw-y days. And was that represented in the options volume? I guess we'll find out. Before we get there, Mark already talked about the term structure. Let's get in there now. Obviously, Jan rolling off the board, listeners. So we got February in that pole position. And as Mark was alluding to, kind of interesting because there is still a little bit of juice to go on Feb. We got some time in that cycle. And he's right. It is interestingly close already to the cash. Only about a point premium between that front future and the cash, which is, as he mentioned, kind of tight for this time in the cycle, which is also worthy of note. That Feb future up almost 0.2 on the week, about 0.18. So not a heck of a lot of evolution there. The March future now slotting obviously into that number 2 spot, up almost a quarter of a point. So we're seeing a little bit of inflection in that front portion of the curve, which again is also indicative that maybe folks are still kind of keeping some powder dry ahead of this and maybe not fully committing to this rally we're seeing out there in the screen. Jim, we'll start with you on this one. I know you love talking some term structure out there. What's catching your eye out there this week as now Feb moves into the pole position, sir?
Yeah, and what has been catching my attention, and I've tweeted about it a couple of times, is what I refer to as the lift and separate move, where equities sell off on any given day, and the VIX futures term structure literally sort of point by point lifts and separates from the prior close, but the shape pretty much stays the same. So, we've got a decent contango from the front to the back in the term structure right now. And even when the market says, oh, let me sell off today, whoever's trading the futures is basically just bidding across the board. They're not, taking the short end up and leaving the back end flat. So the term structure doesn't flatten. It just lifts and separates. And then if the market turns around and rallies the next day, guess what? It just flops right back down to where it was before. So it's almost, like it's breathing, but it's not, it hasn't really changed shape.
Only you can ascribe the human characteristics to the term structure, sir. I like it. Is it breathing for you out there, listeners? Mark, you kind of pointed out you're already surprised at some of the tightness of that front Feb future versus the cash. Anything else catching your eye out there? And do you also think the term structure is breathing, sir?
Yeah, I mean, I guess that's a term you could use for it. It's pricing itself like there's a move coming. That, if you believe that the VIX futures are right, then the VIX is going to drop $1 and get back to 1260. If you're a believer in what's going on in the cash itself, then you would argue that we could see the curve lift and we could see a move toward backwardation. Now, historically, the futures have been right, and the VIX index wrong, but you never know when that's going to change.
You also never know when VIX is going to put up some numbers. Let's find out. Is it today, listeners? And the answer is not quite. It's a respectable day, all things considered, especially when you hear some of these other vol numbers I'm going to throw at you in a second. 352,000 contracts on the tape right now. So decent, respectable, especially when you see that the ADV is a little bit shy of 700 right now, 683, up about 10,000 contracts. So we're at right around halfway to the ADV. So it's about the volume level you would expect out there for a given day out there. So intriguing stuff. We're still waiting for maybe that big trade to drop that kind of sets up the day out there. Let's talk about some of the size positions out here, because I know there's one that's catching a lot of attention, and a lot of people want to know about this one. So let's get there. By the way, this week, again, listeners, if you're in the put defense force, if you're out there saying this is the week when a put's going to slot itself in to the top 10 size positions in VIX, then unfortunately you might as well turn the show off. Actually, we got a lot of good show left to come, so you might want to still listen, but you're going to be disappointed because no puts to be found again this week. All 10 calls all the time out here in the top 10 this week. Cost you 167,000 contracts to break into the top 10 right now, which is a little bit light. It's also kind of reflecting some of that OI rolling off the board, obviously, with January here. So a little bit light to break into the top 10 right now. $167. That gets you to the comparatively reasonable, all things considered, Feb 19s. I mean, they're not that reasonable, but we've also seen a lot more outlandish strikes. In fact, we're going to see some in a few minutes. So bear in mind, right behind it, number 9, 182,000 of the April 60s. So yes, compared to those, the Feb 19s are quite reasonable. Number 8, $1.95 of the Feb 30s. So here we are all over the place again. Number 7, $1.97 of the Feb 16s. So those are certainly quite reasonable. Number 6, 208,000 of the March 20s, so starting to get back up there again. Then here we go, my two favorites. Number 5, 213,000 of the May 47 halves. And if that's too long term for you listeners, allow me to present number 4, 219,000 of the March 47 halves. I love everything about those strikes, even though we were speculating recently that May could have been part of a 1x5, 30,000 by $1.50. We never actually got a chance to decisively confirm that out there, but I think it was 22.47.5, 1x5, which is funky all over the place if those are the strikes as well, but that could potentially be why there is so much size on this 47.5 strike. Somebody's got a huge axe to grind there. Number 4, 219,000 on the March 47 halves. Number 3, back to comparatively reasonable stuff, 226,000 of the Feb 18s. Number 2, 316,000 of the Feb 20s. And I bet you can guess what the number 1 size position in VIX options is right now. If you've been listening to the show for a little bit, you know what it is. If you've been following us on Twitter, or following maybe Henry and Trade Alert on Twitter, or following anybody in VolTwit over the last week on Twitter, you should know what the number 1 size position is. Yes, it is the ever controversial, highly debated, very intriguing Feb 17s that went up right around the showtime when we were talking about them last week. There's 375,000 of those things open right now, including that big block we talked about last week. 250,000 of these went up. Paper scooped them for 67 cents. And at the time, that was the largest block print ever for a single call purchase, I believe, in VIX history. So just an enormous block print out there in VIX options. We asked you folks, we asked our audience. Oh, before I get to those results, let me ask our guest, Mr. Jim, because he loves a good aberrant VIX print. Jim, I'm sure you saw these because they were inescapable last week. We actually joked on the show that 50 Cent was back and he's just adjusting for inflation to 67 cents. We polled our audience if they'd rather buy them or sell them. I'm curious, where do you fall on these? Are you a fan of these Feb 17s? Are you sold to you? And what do you think our audience chose, sir?
What I loved was how Twitter just got the hair on fire.
Oh, they love these. Trades, yeah, they love this.
You know, the end is near. Look, Mark probably has a better perspective than I do. I see some of this stuff happen, but you know, I'm not in the pit. I'm not, actively trading this stuff. I don't know who these characters might be. So, more than anything, I kind of find it amusing. And I do kind of pay attention to what it suggests about which way the wind might be blowing. But, and in this case, because there have been, any number of pundits suggesting that we may be in a window of vulnerability, I took note, but, as we've talked about, one day up, one day down, net result, blah. That's where we've been so far this year.
That is where we have been indeed out there. And our audience liked them. They liked them to the tune of 57.7% said they wanted to buy them. 42.3% said sold to you. So that kind of goes back to what Mark was saying earlier about maybe some folks waiting for another shoe to drop out there. Interestingly enough, we were talking to Henry on the option block yesterday. He obviously saw these and was tracking these as well. He actually set up an alert for himself for when they were printing over $1. So this person was making decent money on these. And they did print ever so briefly earlier this week over $1. So this trade was looking pretty good. Obviously not quite as good right now, but still intriguing stuff out there. Speaking of intriguing stuff, let's see if any other intriguing stuff caught our eye out there in VIX options this week. Like we said today, not exactly an explosion of paper. 352,000 contracts on the tape today. The big dog today, 25,000 of the Feb 14 half puts, followed by 25,000 as well of the Feb 13 puts. So maybe a bit of a roll or some put vertical action out there. Number 3, 22,000 of the the Feb 20s. Feb 20s. Number 4, 18,000 of the May 20s. So getting back out to May again. And number 5, 13,000 of the March 22s. Yesterday, that crazy whipsaw day yesterday. We saw a huge rally in the morning, then a sell-off, and then all of a sudden, the market getting the bit in its teeth VIX coming back off. All that whipsaw action, listeners, you'd think it'd be a million contract day, no problem. Nope. Nobody gave a crap about VIX yesterday. It was exactly as much paper as we have already today. It's about 357,000 contracts total yesterday. So maybe it was just too much whipsaw action. People were dealing with other stuff. They couldn't be bothered to deal with VIX. I don't know what it was, but in terms of underlying movement, in terms of whipsaw, all the things the VIX tends to like, this is probably one of the lightest days we've seen for that much activity intraday. Again, the big dog yesterday, 40,000 of the March 45s. Interesting. Followed by number 2, 21,000 of the Feb 13 puts. Number 3, 17,000 of the Feb 14 half puts. So again, looks like that kind of those same two strikes again getting popular. Number 4, 16, almost 17,000 of the Feb 20s. And number 5, 15,000 exactly of the March 14 half puts. Wednesday, now we're getting to some paper here, listeners. Go figure. VIX in a 15 handle, people come to life. They want to trade it. 1.08 million contracts on the tape. So making up for a pretty anemic Thursday, listeners. The big dog on an action-packed Wednesday, 70,000 of the Feb 18s, followed by number 2, 67,000 of the Feb 17s. Number 3, 61,000 of the Feb 12 puts. Number 4, 61,000 of the Feb 14 puts. And rounding out the top 5 on February, 49,000 of the Feb 13 puts. Tuesday, also a banger, coming off the heels. Obviously, the market closed on Monday for the MLK holiday, so folks making up for some lost time on Tuesday, obviously, 1.13 million. So clearly the banger day of the week, unless today really just turns it on the second half. We're not going to threaten that today. The big dog on Tuesday, 48,000 of the Feb 45. So again, that Feb 45 strike also seeing some action. Also saw a bunch yesterday as well. So action on the March 45s. And the number 2, 41,000 of the Jan 13 half puts. Those are already gone. So, of course, you're heading into expiration as well. So that's also usually a big driver of paper. 39,000 for number 3, April 18s. Number 4, 38,000 of the April 35. So maybe some 17-point wide vertical action there. Kind of interesting. And number 5, 32,000 of the Feb 17s. Mark, a funky week out there. Maybe on some of the days when you would have expected a ton of paper in VIX, it didn't really materialize. And on other days, maybe you would expect a little bit less. They were blowing the doors off. So kind of a weird day. Anything catching your eye out there? And then you and I have not talked officially yet about these Feb 17s. I'm sure you've seen them. I'm sure you've debated them. Where do you fall on this very controversial trade, sir?
I mean, it's a relatively inexpensive hedge. I get why they bought those. I would say the interesting thing is the positioning. We don't have a lot of open interest on the puts, and the open interest on the calls is as relative to puts pretty darn massive. We have a lot of, obviously, Jan rolled off. Current open interest is about 8 million calls to 2 million puts. That is well above average. And, I think points toward the market, one, seeing VIX, seeing that term structure and saying, boy, if we do get a pop, VIX is really going to perform. And two, with us at these all-time highs, the VIX back in the low teens, hedgers being willing to use the options as a hedge, but not a lot of harvesting out there to be had, but owning puts. But yeah, the call positioning relative to puts is pretty aggressive.
Yeah, put money going to die out there, what little there is of it right now, listeners. So yeah, intriguing stuff. Every week we keep thinking maybe this is the week where one put's going to slot in there, but so far we've been disappointed for many, many weeks now here on the show. Are you disappointed with SVIX? I don't know. I guess we'll find out out there. It's kind of hard to be disappointed with it. It's set new all-time highs almost every week since we've been talking about it the last few months. This week, the lone exception, 38 3/4 right about now, down about 3/4 of a point or so from where it was this time last week. So taking a break from the endless setting of new all-time highs, listeners out there. You can't have bangers every day. That new all-time high came, I think, about a week ago, a little bit north of 40.30 to be precise. So a little bit below that, but obviously still looking pretty frothy, pretty elevated. Are the options looking frothy and elevated? I guess it kind of depends how you look. You think 2,700 is frothy and elevated? I guess that's subjective. The ADV is only 3,700, so these things One of the things we mentioned on the panel, last time I did this panel was 2 years ago, and everyone was up in arms about the return of SVIX. It's going to upend the options market. We need new approval levels to deal with these esoteric products as a result. And then it turns out 2 years later, nobody gives a crap. The thing's only doing about 3,000 contracts. And all of that Sturm and Drang really signified nothing at the end of the day. So we'll see. Maybe that's going to change. Maybe people are going to start lighting the world on fire with SVIX options. It just seems for right now that is not the case. Jim, you and I haven't chatted on this show since about mid-November, so we haven't chatted since SVIX made this big change that a lot of people have been up in arms about. Well, I guess it's kind of split the audience, really. We did a poll on it, actually, this adding of VIX options to the holdings of SVIX. Does it make you more likely to trade it because it's safer? Does it make you less likely to trade it because it might impact the tracking? And I think, as I recall, around 55% of the audience said they were more likely to trade it because it was safer. They were willing to maybe give up a few points here or there for tracking in terms of not having that go to zero fear that we all saw back in 2018. As of this morning, SVIX currently holding about 24,700 of the Feb 26 calls. So they are still playing that game. Jim, I know you're a big inverse vol watcher. You like watching all these vol ETPs. What are your thoughts on this SVIX now that it has added these calls to? Are you a fan? Are you not a fan? Where do you fall on this debate, sir?
You know, I have the benefit of an open line of communication to the creators of SVIX. So, you know, I may have a little bit of inside baseball, but I guess one thing that I would point out that may not be obvious to some people in the audience is that most of the short vol ETFs or ETFs that express some flavor of short vol have a hedge. Simplifies SVOL, which shorts VIX futures. It's somewhat diluted. It's designed to, be somewhat diluted, but they have crash protection. I was listening to a presentation about a tail hedge ETF that has been introduced called CHAOS, CAOS. I guess they couldn't get a ticker with the H in it.
That's a great name for a tail hedge. I'm not sure if it makes you more or less likely to trade it, though.
Right. But they, they have options working in both directions. So I think adding VIX options as crash protection to SVIX, they're going to do everything in their power to have it stay true to its underlying index, which is the short vol index. There may be some variations from it, but they're going to do everything they can to minimize it. And clearly, a bit of cash protection in a short volatility ETF has to be a good thing in the long run. So, I'm okay with it. And I continue to use the product.
So from your direct line to the higher ups over there, you can confirm that that is the case. A lot of people have debated why they did this. That was our speculation as well, that they didn't want a repeat of 2018. That's your takeaway as well. That's why they're buying these calls.
It is crash protection.
Okay, so that is indeed, that's what we speculated. But at the end of the day, you never know what folks are up to out there. Mr. Mark, you and I have discussed these a few times now. You've had some time to mull it over in your head. What are your thoughts on SVIX now with these new holdings? Have you been up to anything out there? I know you in the past, you had some underlying, I believe, and I think you were writing some calls against it. So are you still doing that? And do these new holdings, do they make you more or less likely to use it, sir?
Well, I'm going to lose my position in January, so I will reestablish a new one, probably a quarter out in SVIX here in the next couple of days. Yeah, I mean, I like SVIX. I think it's a great buy right strategy. The upside vol is nice. I like, I like the product a lot. I think it's interesting. And really, does what it's supposed to do. They don't have the TAS issues. So, generally speaking, this is one I like to kind of buy, hold, and sell calls against.
So when you establish a new position, you're just going to buy the underlying? You're going to sell some puts to get in first?
I'm going to, I haven't decided yet. I may sell puts. I may just buy the underlying and overwrite a call.
That's not a use case we hear a lot with this product. I mean, it makes sense why people would do it. The juice isn't always there for the puts, but we don't hear a lot of people coming in and talking about writing the puts all day as a way to get into it, even though, especially given where it is right now, it's certainly one way to go out there. For whatever reason, it doesn't come up a lot. That's why I wanted to bring it up there, because it's not an approach, for whatever reason, gets a lot of love. Are you out there selling puts in SVIX right now? I'm curious. Hit us up. Let us know. Maybe some of our pro folks in the chat out there are blasting away at SVIX puts. Or if you're listening after the fact, hit us up at optionsquestions@theoptionsinsider.com. We want to hear from you folks. How are you using SVIX right now? Let's go out to some of the other products out there. Let's go with the sibling product first. Let's go to UVIX on the levered front at about a 12.5. So after kissing a 15 handle, at least a high 14 handle earlier this week as well. Let's see, how high did UVIX go this week? There we go. If my machine wants to play ball, we got up to about 14 3/4 on Wednesday. So not quite a 15 handle. I knew we got close. We kissed it. Giving all that up now, down to about a 12.5. That still puts it up about a quarter, but it's probably giving up some of that by the end of the show. That'll probably be gone as well. So again, we're talking about maybe having to get back into reverse split territory pretty soon. 6,600 contracts on the tape. Not a ton going up out there this week. Excuse me, the ADV 12,000. That puts it unched on the week as well. It's not a heck of a lot to light up out there in UVIX. So instead, let's keep going to what I know is Jim's favorite product on the planet. I think he is the captain of the UVXY defense force out there right now. Whenever we talk disparagingly about UVXY versus UVIX, he is quick to raise the banner and marshal the troops in UVXY's defense. UVXY right now, a little bit shy of an 8, 795, up about 0.2 of a point from last week. Putting up some numbers, though, which again has been the number one argument in defense of this product. UVIX right now doing 6,600 contracts today. UVXY 87,000. So a wee bit of a difference from a liquidity and volume perspective. The ADV obviously also much higher. 106,000 right now in UVXY. Versus an ADV of about 12,000 in UVIX. So still a long way to go for UVIX. In terms of top positions, we've got some stuff going the way of the dodo today, including the biggest position outside of the non-split adjusted stuff is the 23,000 of the 7 puts, again, that are going the way of the dodo today. So doesn't seem like those are going to come into fruition today unless we get a big sell-off in UVXY by the end of the day. But Jim, you're the biggest UVXY proponent that I know. What's catching your eye out there? What are you up to in this product right now?
Well, I think I need to just slightly adjust the perception.
I will not allow that. You are the captain of the UVXY defense force, sir. That is it. You have the flag, you have the shirt, you have a hat.
Well, in that case, UVXY Borealis. I think what I have said in the past is that UVXY is going to do just fine so long as it maintains its position at the top of the heap of the long vol option chain. UVIX has been making some strides, making some progress in AUM and volume, but is still way behind in terms of option activity. And therefore, if you're a long vol user who wants and needs a vibrant option chain around your underlying, then UVXY is the game. Obviously, UVXY doesn't give you the same juice that UVIX does for the underlying. So it really is a function of use case. I am a fan of both. In terms of the underlying, I would favor UVIX if I was going to take a position using a levered long product. But if you want to express your opinion using options around these products, then UVXY is your dog.
UVXY. Well, our audience tends to agree with you whenever we do polls, UVIX versus UVXY. They all overwhelmingly choose UVXY. So clearly you're on the tip that our audience is, Mr. Jim. The Meatball and I, we still kind of scratch our heads. We're like, but at the end of the day, just product to product, one's doing the job better. I get it. One's more liquid than the other, but one's doing the thing you want better. So I guess it's kind of a pick your poison. Do you want a better product that does the thing better, or do you want a more liquid product that's not as good? I don't know. It's still a contentious thing. Mr. Meatball, I know you agree with me on this one. You're more of a UVIX guy, but do you ever get lured to the liquidity of UVXY, sir?
I am. I get why people would use UVXY. The options are liquid. But I am a UVIX guy. I use UVIX. That extra decay to me is kind of worth playing. The option liquidity in UVIX is getting better and better and better and better, which I'm excited about.
Yeah, it's getting there. It's had a couple of years under its belt. Still not maybe where we want it to be, but it's getting there. Maybe, who knows, in a couple of years, it'll be rivaling UVXY finally. Then Jim will have to make a decision. Which defense force does he truly want to captain? UVXY or UVIX? In terms of earnings vol, before we get to Crystal Ball really quickly, it is another hot week, listeners. We had a lot of financials this week. We had Goldman, we had Morgan, we had PNC, we had IB on Monday, a lot of financials. Chucky Schwab, I'm sorry, on Tuesday. Chucky Schwab on Wednesday, Citizens, Alcoa, so aluminium vol for all you Brits out there. Northern Trust yesterday. Today we have Ally and Fifth Third. So just financials for days this week. Next week, of course, we got some bangers coming up next week, including a name you may have heard of like Tesla and a few other ones. Netflix, you folks like to trade. Luckily for you, because we like you, we've got all the vol analysis for you over there up at theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side. If you are curious right now, our earnings vol for the season with a whopping 23 names reporting, so still very early, 86%. So we're coming in under the wire there. So a light start to the earnings season, but we got the bangers still to come. So they're probably going to change that number. You can stay tuned to our website for the latest out there as we keep on going right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's get to it. Let's get to a little bit of crystal ball action, listeners. Last week on the show, it was myself and the Rock Lobster. He had a little bit lower vol. He had a 12-12, so he was trying to play the meatball palindromic nonsense, but didn't quite get it right. And then I was at kind of an unched week, which was at about a 12 double, which was looking all right for a little bit. And then obviously we have not been back there. So we're at about a 1365 or so, 1370 right now in VIX cash. So a little over a point away because I was at 12 double last week. So no winner chicken dinner for this week. So that means our guest gets the pride of place of going first. Mr. Jim, what are you feeling? And also, as I noticed when we did our VIX prediction poll at the beginning of the year, our annual vol sentiment poll, I noticed you piggybacked it with a poll of your own where you asked our audience, where will VIX peak in 2024? And 40.3% of them chose north of 40. So they're feeling a bit of a banger year out there this year. So, Mr. Jim, two questions. First off, were you surprised at the results of your own poll? And then B, what are you feeling for vol this time next week?
First of all, I was ecstatic that people are looking for a little bit of an explosion sometime in 2024, because this dullness is getting really boring. In terms of next week, wow, I'm going to go against the narrative that things get unpinned, and I'm going to say we're at 1350.
1350 for Mr. Jim. So a little bit of evolution, not much, but a little bit out there on VIX cash side. Mr. Meatball, I was the closest technically last week, even though I wasn't close to winning. So, and you weren't on the show last week, so you get the fun of going next. What palindromic nonsense are you feeling for next week? Does kind of limit your choices, I must say, going the palindromic route.
Oh, 100% I'm going palindromic. I'm going to say that the liquidity pocket people are right, and we go to 1551.
Ooh, a little bit of a resurgence of what we saw this week, but we're hanging out there at the end of the week. Interesting. I wouldn't hate that. I wouldn't hate that at all, listeners. I'm purposely not looking at the chat. Don't want any distractions luring me away from my prognostic. I was feeling kind of an unched week on vol last week. We got a little bit of extra juice. I'm kind of in this is maybe a bit of a head fake department out here as well. So I would not be hating, obviously, a move, the meatball. I'm not sure if I see quite the magnitude of the move he's got cooking for us, even though, again, I wouldn't hate that. But I'm going to say a little bit less. I'm going to say 14.75. So that's our vol market for next week. Jim playing the low ball role next week, 13.5. So kind of unched on vol next week. Me coming in right at the Goldilocks, right in the middle, a.k.a. the accurate prediction, 14.75. And the meatball hitting us once again with some palindromic nonsense at 15.51. All right, listeners, that music means we have come to the end of the old Volatility Views program. Man, how an hour flies when you're talking a little bit of vol. If you're on the on-demand side, it does conclude your broadcast week with us. I want to thank you for joining us. Of course, if you're on the pro side, stay tuned. We'll be back for options oddities in a little bit. And hopefully that panel should be hitting the pro side sometime, maybe even this weekend. They can get it all cut together. So stay tuned for that. But before we go, Mr. Jim, if you have any other takeaways you want people to have from your 2023 vol analysis, have at it. And then B, if people want to reach out to you to get said vol analysis or just to talk some vol, where should they go? What should they do?
Easiest way to find me is on the X, formerly known as Twitter, at VIXologist. My DMs are open, and have at it.
And any other last takeaways or nuggets you want them to take away from your 2023 vol analysis, sir? Now is the time. The floor is yours.
I would say, in keeping with prognostication, that 2024 will not be as dull as 2023. Strap it on.
Strap it on. A year with fear, dare I say, sir, as opposed to a year with no fear. So no Daredevil this year, listeners. You're all going to have some fear in your back pocket. Says Jim. You agree, disagree? Hit him up at VIXologist. He's here to take on all comers out there and also to fly the flag of the UVXY Defense Force. And Mr. Meatball, sir, same question for you. Where should folks go if they want more meatball goodness in their lives?
Yeah, come to optionpit.com and join us in all my volatility and trading analysis. You'll be glad that you did. It is worth your time. We're trying to provide value to people every single day in what we do and how we trade. So join us.
Optionpit.com, the place to go. We got to get on out of here. Thank you for joining us on the on-demand side throughout the week. Back again in a little bit for the pro folks. TheOptionsInsider.com/pro is the place to go to get access to that. Then we're back again on Monday. No holiday on Monday this week, listeners. So we're back with the option block and the crypto rundown. Should be a lot to talk about there as well on the crypto side. Man, stuff flying fast and furious out there. And then, of course, back with our usual array of content all the way through to next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.